Happy Friday. Welcome to the show. I didn't know we had so many people that are out of the country that view. We got Canadians, we got Singaporeans, we got Australians, we got Englanders, got everywhere. Kind of cool. And so y'all don't get offended when I say, dang it, right here in the old US of A, we love it, baby. Well, Bobby, it's only because you hadn't traveled outside the walls of the United States. Yes, I have. Now, I ain't getting a lot of places. I've been to Mexico, and I've been to the Cayman Islands. I've been to Jamaica. I've been around. I've been offered the wacky weed in Jamaica. I think a lot of people have been offered the wacky weed in Jamaica. I've been a lot of places. So now I don't like flying, but I have. And last night I had the weirdest dream, y'all. Now let's help interpret this dream. Last night I dreamed that my friend Randall couldn't take care of his bear, an honest to God, big, humongous, like black bear. And he said, Bobby, you got to take care of it. And I'm like, I don't want to take care of a bear. And this bear was the sweetest bear. And I was walking around the streets of Bowden, and people were like, Martin from Hong Kong, baby. Hong Kong. Or as we say it here in Georgia, we say Hong Kong, which is not the way you say it. Yeah, Hong Kong. But I like to go there. It's like a financial capital, man. That's a busy place. Is it okay since the Chinese took over? That's a little communist taking over, and we will keep it free, baby. But what was I saying? Oh, and so this bear, and so nobody would talk to me. I was like, one of my friends, Nan, was going down the street. I said, Nan, come here. She said, I ain't coming to you with that bear. So I'm thinking, what did the bear mean in my dream? Because you start thinking, investments, bear. Is the bear not really that scary? Is the bear market maybe over? Volume increase over the red day. Volume increase over the previous green day. That means we've got, say it with me, momentum. And I feel that this volume bar may eclipse this volume bar. And oh, behave, we are outside.
Oh, behave.
Outside.
Yeah.
So we are outside of the linear regression downtrend here. What the crap is that? So is the bear market over? And then look, we're not all that far from eclipsing the 200 daily simple moving average. But I still contend this is a very well-defined bear market. Looks like we might have turned the corner because we have, say it with me, we have us a little trend line. We can draw us a little trend line kind of through that right there, right? It says, hey, 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 maybe it's over. Maybe that's why the Lord gave me a dream about a cuddly, cozy bear that loved everybody. Maybe the bear's not so bad. We shall see, but I still contend it has much farther down to go. Why? Well, let's just look, y'all. We have an administration that is now redefining what a recession is. Well, really economists don't agree that recession is 2 declining quarters of GDP. That's what it's always been. And now we're going to redefine that. Okay, so a woman has a vagina, or as my daddy said, a vagina, and you say, whoa, not so fast. That's not necessarily true. So I don't know, man. We live in a confusing world when up is down and down is up. So maybe all the bad news is bullish. Maybe all the bad news is bullish. Now, why don't we look at this? Let's think why we're going bullish. Okay. I think people say, hey, a recession is good in that old J Powell and his band of merry men will stop raising interest rates, because in a recession, in a terrible market, you stop raising interest rates and you go to neutral to maybe cutting rates. And I think that's what we're seeing, right? But what's going to happen is that people like me who are now drinking water at restaurants because we're not willing to pay $30 for my family of 7, 8 when mama goes with us, to pay $30 for drinks that my kids just fill and, blow bubbles in with their straw. So as we cut back, then I believe we're going to go back farther because I believe people are cutting back. I really do. I think it's a prudent thing to do right now. Some people are not cutting back. I went by one of our local restaurants yesterday, the Smoking Pig, and man, baby, everybody and mom was out eating, and I go, well, how y'all doing this? And I know how they're doing it. They're doing it on, how shall we say, the credit card. They're putting it on the credit card. Well, when we max out our credit cards, then you kind of got to stop or you got to open another credit card. So I think that we have much more calamity, that we have much more unfavorable economic data that will certainly pull us down. Now, with that said, we looked yesterday at the big green monster. And if you don't know what a big green monster is, you make sure you tune in on Monday because we will draw a new big green monster. But look, remember yesterday I said our big green monster is bullish. And indeed it was. So our primary thesis yesterday, and this will ring a bell with some of you, our primary thesis yesterday was a market bounce to the, market bounce to the 41.65. We are at 41.26, and these things, these levels are incredibly accurate. It doesn't mean that they always work, and so you have a primary thesis, right? That hey, we're going to here, and indeed the chart shows that, and then we always have an alternate thesis, and the alternate thesis is a pullback to the 39.72. So which gives us a nice little probability cone. And you've seen these probability cones. You can actually bring up probability cones in the analysis tab, right? Well, I should go lower that. So I got this little probability cone where we kind of think the market will drift within the next 10 days. And that's where I think the market will drift in the next 10 days, between here and here. Most likely the first move is going to be here to the 41.65. Okay, but this doesn't mean jack squat crap, because what we do really doesn't depend on this. And I've been spending a lot of time with Ed in our mentorship saying, Ed's got all these charts and he's got all this fundamental garbage, and he's like just sticking to his TV on the FOMC stuff. And so this week, Ed's assignment in his mentorship was to not watch the Fed announcement, not wait for it. So he was out on the grill cooking hamburgers during the Fed announcement. And it was very uncomfortable for him. But I think it was kind of like an aha moment that really all that we do is put the market, even though we're kind of sizing it up here, we put things in a quantitative analysis and a quantitative state that we analyze all this stuff. So what we're also basically doing is we're taking the odds and we're placing those in our favor. So we back tested our trade. Our trade has a 98% probability of making profit every time that we put it on. Now, that does not mean that each trade has, could be 98% profit. Any trade that you put on could certainly go south. But over a series of trades, and you and me being the monkeys that hit the button, over us doing it over a series of trades, the probabilities come into play. Now, some of you are too nervous and you're too scared to put on the trade. Some of you are allowing fear to enter your psyche to prevent you from trading. And so what you do is you're waiting until everything lines up for you to make your trade. If you do that, the paralysis of analysis will infect your body like the monkeypox, and you will break out in hives all over your body. That's what it does to your trade. So you're looking at 18 different indicators. And y'all, I've had them all. I've had every stinking indicator known to man. Let's see if I can load some of the crap that I've had before. Let's just show you some stuff. I know I've had all this too, but let's see. RSI and fractal exhaustion, y'all. So, and I'm sitting here going, well, I won't put in a short trade until it goes into this area. And then I won't put on a bullish trade until it goes into this area. And then it's got to go above this level before it goes to. No, that's exhausting. It's just literally exhausting. And then you will wait until everything lines up. And I've used it all. I mean, I'm here, y'all. I've had, all this stuff on here, Quantitative. Y'all seen all the stuff that I've got. We've got, let's see, just share some of the garbage that I've had here. SPY aim comparison, SPY cash trigger. Oh, this would be a good one. Some of y'all want me to share it to you. Let's only make a thing if we have a trigger, right? This going above that, this going above that. And y'all, this stuff, keep it simple. You've got to keep this stuff simple. Look at this. We got, oh man, we got the comparison tick, we got the MACD, 2 lines, and when this happens and that happens, stop it. Stop it. Get you 1 or 2 charts. I've got nothing against charts, but when you are starting to, have all of this stuff, then you're going to be, here's our expected value cone, right? Let's look at our cone. There we are, baby. There's our expected move cone. Let's put it on here. Let's see if that'll work with our big green monster. Yes, now we got our big green monster. We should have our big green monster. There we go. We got a probability cone. Look at that, y'all. So this is what I'm talking about. We just wait for all this stuff to kind of line up and happen. And you really don't need any of this stuff. We really, really, really don't need any of this stuff. Now, whatever you're doing, I want you to simplify. I want you to simplify all the analysis and all the research that you're doing, because basically the analysis and research can be simplified by just using probabilities. Now, let's look at the expected move real quickly, and then we'll talk about the probabilities. So here's our expected move chart on SPX, which is pretty cool, right? So within this week, so this is this week, right? Yeah, here we are, 725 through 729. So that's this week. Notice that this is a week that we have exceeded the expected move. Here was the high, which was 4044. We have blown right past it. So next week's expected move is bullish. Everyone see this? This is the next week. This is the low. Here's the high. So next week's expected move is kind of a bullish chart. So seems like we're going to continue being bullish. Interesting analysis when you look at things like this, right? But just keep it simple. So let's go to our regular chart, see if we can get any indication of what's going on today. Look at the volume. Volume's a little less than yesterday, right? It's a Friday. We got to get to the Hamptons. We got to go to Lake Wedowee. We got to get our kids, the final hoorah before we send them all into school. And so volume is a little lighter than it was yesterday. But look, y'all, we have blown the top off the overnight high. We are well above the opening 15-minute range. We don't even see the cash open in the chart. Where's the cash open? Now here's the overnight low. Here's VWAP, the hourly mid-band. So we are bullish, 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 up 1.31%. All right. All that to say is all that crap means absolutely positively nothing. So what we're going to do today is what we always do. And we're going to put us on a little trade. Now, when I'm looking at tranche size, now, if you've got a $5,000 account and you're sitting there going, Bobby, should I do a trade today? Well, it depends. You've got to follow your Greeks, right? So let's follow our Greeks. First of all, see how we're doing. Let's go to this thing. So we're up $50 from yesterday. Let's go to our Greeks and ratios and put these in. Go to Crimson account, monitor, take our groups off. So we're 11.63. We would expect that to be lower than yesterday because the market's gone up. And it is 11.63. Our theta is probably less than yesterday. Let's see. Yep, 18.96. So you kind of get a feel for this, right? The more you do it, that's what your Greeks are doing, even without looking at your Greeks. 18.96. Yeah, so we're 0.07. We need to be at 0.1. So we need to sell premium. So I would ask you, does your theta tell you that you need to sell premium? Bobby, I'm not going to sell anything on such a big up move. Black, whatever you call it. Black glass wearing fat, whatever. So I got it. But let's look at VIX. On the up move, we would expect VIX to be down. Indeed, it is. But there was a time that you and I would what? Kill for a VIX of 21. We would kill for a VIX of 21. So you and I, to sit here and go, want an update, I'm not going to put on a trade, is ludicrous. It's just ludicrous. I would expect that my buying power went down. Let's see if that is the case. Don't embarrass me in front of my friends. 54.51. 54.51. Indeed, it did go down. You get a feel for these things, right? 54.51. So our deltas are fine. We can have a maximum delta of 39. Our theta needs to be increased. Our buying power is fine because with a VIX of between 20 and 30, I can use 35% max. We're getting close to only being able to use 30, so I'm using 20% of my count. So what does your Greek say? Oh, can I yell at my kids 1 minute? Y'all please be quiet. Abby, get them out if they're going to do that. So you would sit there and say, well, what are we going to do? Well, your account is screaming for you to put on a trade. You're underutilized in your buying power, Tubby. Your theta is low. It's saying, hey, Bob, put on a trade. Well, I can't. It's on the day up. Well, the VIX is 21, dude. You got to put on a trade. So you don't need to have any bit of reservation in putting on a trade. You are the monkey that hits the button. You are the monkey that hits the button. Yeah, but Bobby, we're going into a weekend. What if China invades Taiwan? What if China blows up Nancy Pelosi? What if World War III begins this weekend? Well, what if? What if, baby? You're gonna be fine. My mama lived through World War I. She lived through World War II. She lived through the Hong Kong flu. She lived through Vietnam. She lived through her son going to the Korean conflict. She lived through all that. And guess what? My mama would have lived through the COVID too. She hadn't have died in 1994. So she lived through all that stuff. And she would always tell us about how bad things were when she had the Hong Kong flu. But she survived. And did she ever go, well, I got to worry about? No, you don't worry about the unknown. You can't worry about the unknown. All you can do is trade what's in front of you. So to trade what's in front of you, you go over and you say, well, let's use quantitative analysis. So the quantitative analysis is this. Y'all know what we do. We go to the micros and let's just look at the statistics. So 49 days. So come Monday or Tuesday, we'll be trading in this expiration because we'll go close to 60 days without going over. Okay, I'm gonna do a long put vertical. I'm gonna do 50 wide. Now that one's I could buy for $20. I don't want to do that. I want to buy for $10. So I'm gonna move my strikes down. I move this down to about $10, which is right there. All right, so then because the market's up, I kind of want to get my short puts way out there. So I'm going to use now on this, I have a probability of profit of 30%. The odds are against me, right? There is a 70% chance that this put debit spread will lose. So I want to go out and put the odds in my favor. So I go out and I find something that I can sell for about $10. So I go out here, look at that wide spread, 10 to 12. 11 to 12.50. So I'll go maybe this is a tight little one here, right? So I go out here and I'm gonna go sell 2 of these. I'm gonna increase my quantity on that. Now, let's look at this. So this now has this is a 6 delta. It has a 7% probability of being in the money. And what is the probability that the market moves down and touches 35.20? Y'all remember our little rule of thumb? It might be walking this dog right here. Oh yeah. It ain't. Does anybody know what's the probability of us touching the 35.20?
Hey, Bobby, sorry.
Hey, Ed.
I was actually distracted there for a minute, so
Ed, you wasn't watching Pern on the second computer monitor, were you?
I'm actually eating, so
No.
guilty.
Just make sure you wasn't watching the nudity stuff on the second channel.
No, it's very quiet. I have no news on it here. In fact, I just filled my daily 112 a few minutes ago, so
Ed, what's the probability of touch? If we got a 7% probability of being in the money?
14%.
Yes, 14%. Hey, I am new to you in this website. Just joined. I watched your session for tasting and trade what you said. I had experience selling options. Just know me your side of strategies. Where would you recommend I start with getting up to speed with your stuff? Spend time in the Discord room is what I would say. Go if you're interested in our strategy. I would read everything you can in the 111. And then I would go to our YouTube channel, search for Sweet Bobby, and I would pull up anything on the 111. I think I've got a channel in there for 111. So glad to have you with us though, BT. All right, so yeah, it's 14%, Ed. Very good. So the probability of touch is 2 times the probability of being in the money. I don't believe me, do you? So let's see if we can do probability of touch. Look at there. Probability of touch, 14%. Ed nailed it. So you and I have a good way of figuring it. Right? So probability of being in the money, 7%. I like those odds. So now by adding 2 of these, we have taken a trade that had a 30% probability of profit, and we have changed the probability of profit to 97%. We have a 97% probability of profit. Now, do y'all see how awesome that is? So that's what I want you guys to think about. What we're doing, well, Bobby, it's an update. I don't put trades on. Hey, that's fine. But if I can still put on a trade with a 97% probability of success, I'm going to do those every day of my life. If you can sit at a blackjack table and have a 97% probability of profit, you do that every day of your life. So what you and I have done is we have become the casino. We are the house. We are the ones who have the fancy lighted whatever and having all the ding ding machines, and we got all the ladies running around in cocktail dresses serving the old alcohol to the alcoholics smoking cigarettes at the slot machine. That's who we are. That's just who we are. We're greedy capitalists, but we have a heart of gold because we do things that help our communities. We do. Oh gosh, I left some medicine. Oh no, okay, sorry. Thought I left some medicine in the car. So now we've got a probability of profit, 97%. We have a max profit. And where does the max profit occur? It occurs if we expire inside the tent of the put debit spring. That's where our maximum profit comes. But we have a maximum loss of 35,000. If I lose 35,000, you fat black glassware, and Elton John loving son of a gun, then I'm gonna be mad at you. I got it. What if you go out today and you're killed by an ice cream truck? What if a Chinese satellite comes crashing down that's the size of a Volkswagen Bug and falls on you and kills you and your husband or your wife? Yeah. What if? What if? What if? So we don't live in a world of what ifs. We live in a world of high probabilities. Now, every now and then, now for you to have this maximum loss, SPX micros would have to go to zero. So you're not going to have that loss. What is probably the maximum loss that you would have on this trade is going to be your buying power effect. So your buying power of $925.77 is a reasonable expectation for you to, if you were to have a loss in the trade. So they're requiring you to put up about $1,000. They're saying by you doing that we want you to have $1,000 in your account in the event the trade goes wrong. If the trade goes wrong, probably your loss, your max loss, is going to be around the buying power that you used to put on the trade. Now, some of y'all can say, well, Bobby, it could be a lot more. Yeah, it could. But they're pretty good at, even though we're using span margin, at figuring out how much collateral you and I have to put in for us bringing in a credit of $14. So I hope that makes sense to everybody, right? So,
Hey, Bobby.
Yeah.
Just a couple comments. We're also kind of, and this is another, you said a casino where the odds are in our favor. We're also kind of insurance companies. We're selling little tiny bits of insurance to other people in these high probability outcomes. So we take in a little bit of premium from all these people, little bit, and chances are everything's going to be fine. Every now and then a hurricane or an earthquake happens, but we're kind of like insurance companies. The other thing I wanted to mention is, this is something that's I'm aware of, but it's settling in more as I'm forcing myself to put more positions on into this up move. So I'm sharing with everyone, yeah, I am putting my position on because my buying power and my Greeks say to. And I'm also doing it because I'm taking my medicine from not doing it a little more aggressively in the last week and a half, 2 weeks, as I was building out this recent campaign, because I was sitting on my hands a little bit with the FOMC, with GDP, with all the big earnings coming this week, yada, yada, yada. So, for better or worse, that's going to work out half the time. The other half of the time, it's not going to work out. So I wanted to mention that, as the market rises higher, we're putting on higher put debit spreads. So if the market kind of holds up and then has a 3 or 4% pull back, it's going to pull back right into my profit tent on these trades I'm putting on now. Not the ones I put on a week ago. Those profit tents are hundreds of points lower. You know what I'm saying? So there is some, besides building the forest with these little trees, there's also the recognition of what we're actually doing, which is putting on higher put debit spread, which is eventually going to pay off for us, either in stronger protection or actually getting in the profit tent with the market at these levels. So I don't know. I just want to throw that out there, and I'll be quiet now.
So what Ed is talking about here is we build a series of trades, right? So everybody sees this beautiful whale that I've got here. And this is at expiration, right? So we got an expiration. My whale looks really nice. He's got his little, he's spitting out his water, got a little eye. So we built this beautiful whale to the downside. Just look at that, it's gorgeous. So here's our whale. If we change that to instead of an expiration, what he looks like, here's theoretical now, right? He's not as big, right, as he will be, but at expiration, you see that this thing just keeps growing. So as days go by, what is now this? Put you back the wheel. What you can? There you go. So what is now this at expiration is here now, right? So I got a little bit of a hump, but as these things keep developing, it keeps growing up, getting larger and larger as days go by. Right? This thing just gets larger and larger and becomes more of a little tent and a protection to the downside. So, if you're putting on trades, you can do some income trades, right? Where you say, I put the trade on, put it off, and then put you some hedge ones in there too. So a hedge trade would be one that you put on and you say, listen, as soon as I get 50% on my naked put, right? So the naked put that you sold, you're short a naked put. As soon as that thing gets that 50% profit, I'm gonna take that off, right? Take risk off to the downside, and then you have a free hedge. Because this is one of the big things that you and I have talked about over the last couple of years, right? We like doing hedges, we just don't like paying for it. So there are times when you can say, man, I can take off the naked component and I can have a free hedge. Well, let's look at that. So let's go look at our positions. So we put on a trade today. Let's see. Sorry. Activity, build. So we put on a trade. So there's the trade we put on. So now let's go over to the other account and the Crimson account here. And let's look and see if we've got anything that we could use as a hedge, right? If you're afraid going into the weekend that you've got problems, you can go here. Well, that one that's that funny thing that we didn't close right. So I need to at some point get out of this one. Still got 33 days on it. Remember when I closed one, it closed the wrong put. Okay, so this one's up 46%. So the naked component's up 46%. It's close to being to a point that I could take that off and have a free hedge if you think the market's going down. 112 30 30, it's up 86%. Well, hello, like 86%, Joe. That's just a what is that? That's just a short. That's gonna drive me crazy. All right, so that one ain't really a hello lady. All right, so here is the naked component's up 30%. 112 30 seconds. That's gonna drive me nuts. This is up 88%. Yeah, that looks. So look at this, y'all. The naked put, I made money. I could close this, have a free, absolutely free hedge on with a put debit spread for 33 days. And I'm going to make money on the overall trade regardless, even if I close this one. So I don't want you to spend too much time evaluating these trades, but I want you to think about different things that you can do. So if you say, man, I need some hedges, we fixing to go down. Well, what do? Put on a trade and say, I'm gonna make this a hedge trade. So as soon as the naked component gets to 50%, I got a free whatever. See, I could close this one, leave this for 49 days and have a 49-day hedge. Isn't that beautiful? Let's just look at 11110 for a minute because that's up 77%. So let's look at 11110. So go to your analyze tab. Go to micros, whatever you got the position in. Okay. You want to take off, let's do one expression is fine. Let's do show all. Let's hide simulation. Right? We're going to do single symbol. And instead of all groups, I want you to go 11110. So the one that you're looking at. Here we are, y'all. Look at this. Look at this. We are, right at 100% profit. It's 80 something, right? We're at 50 something. If we waited till expiration, we could have $100 of profit. But look what happens. We've got this beautiful 10 down here to the downside. Now, true, if the market goes down, what is this? A 5% move down. This is the 12 or is this 20? Price slices 33. Price slices. Yeah, so 33. This is a 20% down move, 20% down move. If it does it today, we're going to lose $512. But if it just kind of hangs in here and hangs around that area on a 20% down move, we're going to make $295. All right, so what if we were to close the naked component today of the 1110? This should be this trade here. So there's a long or short. So what if we close this today? What does this trade look like now? Look at the hedge. You cannot lose money on this hedge. This is what we call beautiful, baby. Beautiful. So if market goes down to 36, 37, that's a 12% down move, right? 12% down move. But look at this. Look at this beautiful hedge. If it goes down more than 12%, look what you've got. You've got a profit at expiration of $198.75. And so you can just operate them like here. Look, it doesn't matter if the market goes to zero, baby. You can't lose money. You can only make money. And you're not going to lose money if the market goes up. Why? Because you've already made your profits on your naked component. Isn't that beautiful? Oh, that's good. Do you leave the trades on until expiration or manage early? BT, I normally manage early. If I were going to leave this on as a hedge, I would probably hold it till expiration. Hold on a second, my red head. So what about you? Yeah, bring them over here and here. Now you got to walk toward me. Walk toward me a little bit. Now bring this other foot forward. All right, raise your top toe. Do you feel like you got room in there? Okay, they're pretty. Bill, why you buy my kids white shoes? You know they're gonna get dirty. What? Oh, cheerleader shoes. Oh, that's beautiful. Got the little red on the side. Oh, I can't wait for cheerleading. That's gonna be so good. All right. Yeah, I think they feel fine. Sorry, y'all having to feel. You know how your kid comes up to you, Daddy, feel my toe? Is it? You know. All right. So, any questions on doing this as a hedge, as a free hedge? Y'all don't tell everybody this. All right. Not everybody knows that you put hedges on for free. Now you're gonna take a little risk, but when you got all these together, what does it look like over here? We got expiration, 4 expirations. Go to this. Let's look at all of our trades. All groups. Okay, kind of looks like, you know, we're building this little hump, and then you can go through real quickly and just look at your trades, right? Look at that. Okay. Just go through them, look at your little humps. Look at that. Beautiful little hump. We're building humps, y'all. We're building little candles. All right, but I digress. I spent way too much time talking on that, but I think it's an important concept to know that these trades are so versatile and there's so many things we can do. All right, so this one, let's see, this one has, let's see what we're going to close today. This one is messed up. I don't know where my naked one is. This one is up 42%, up 86%. That's for some reason just like that. I think that's crazy. 11236 is up 22%. 11236. There's the one we got to close, right? 86%. Unless we find something better. Okay, so these are close. I would close this one even if they were the same. Why? Because it's closer to expiration. Right? I'm going to take off those trades to take off any gamma risk that we're going to have from this getting closer to 21 days. So definitely 84 is our best one. Here is up 60%. I'm going to take that off. This one is up 60%. This one is up 46%, and this one is up 61%. So we got a clear winner here to take off. So let's take this little puppy off. Or you could use it as a hedge. I don't want to use it as a hedge because yes, it's coming soon, Carrie. The latest 111 spreadsheet is coming soon. I am working diligently on getting that out. So, you know, it'll be coming soon. Just hang on for that. So what we're going to do is we're going to close these. Now, how do I know I don't need to hedge? Well, my delta's low, my theta's low, my buying power's low. The best hedge you can have is what? Size. Size matters. You know, a lot of fun, especially there. All right, so let's close these. They close in order. We'll sell that. And then we're going to go grab 2 of the 3200s. Let's go grab them. 2 of the 3200s. 2 of the 3200s. 3200s. No, we have 8. 3200. There you go. 2 of them. Buy 2 of those back. So it says 230 debit. We'll try to do 225 to get out of it. Let's see if we can get out of it. 225. We'll cost me $17. Jack, squat, crap, nothing. Place, make it less advantageous. I'm going to pay debit at 250. There we go, 250. All right, so we got out of, which one was it? Was it this one? 11236. That 11232nd. 11232nd for 250. 11232nd. So we'll put that in. My close. 11236. Oh, look at there, y'all. It's our oldest trade. How about that? Isn't that funny how the oldest trade sometimes or the next one to come off. So we got out for a 250 debit. Let's see where mom and daddy's gonna go eat tonight, baby. Come on. What? Hey, Beth, it may be a Southern lady night if you'll behave yourself. Huh? Because your man just went to work, baby, made $58.24, hon. Huh? Difficult woman, yo. I knew I had married a difficult woman. It's on our wedding video, too. I got behind her, and the music's going, the band's playing, and I'm trying to dance. And she turns around and she gives me this evil, almost reptilian-like look. And she goes, "Get off my dress!" And I thought, wow, what have I got myself to? Ooh. So we made 58.24. Let's go put that in our pipe and smoke it. 24. Profit calendar. Just don't brag too much, y'all. We're doing good. Look at this, y'all. 58.24. Oh, we're gonna close the book on the month, aren't we? Look at this. Hello. Let's just figure out how. Oh, geez. I always have this format problem. Format. Oh, this format. Format painter. Jeez Louise. Oh, so let me merge and center. Format painter. Give me a second. This is gonna drive me nuts. I know it's driving y'all nuts. That look better. See if I can write it down. It gives me this problem. What I need to do. Oh. 58.24. So I'm gonna put it. Leave those words in there. Now, 58.24. So we made 234.21. Let's add up our profits, shall we? So we'll go. We'll go monthly. Uh-oh, what the crap is that? What's that? Who got that turned on? Let's try that again. So monthly profit. All right, so we'll go monthly profits equals sum of all this garbage right here. So we got sum of all that junk here. Let's finish it out. Sum of S12. S12 is Z36. S12 is Z36. So that means we made $179,041 and we're moving on.
Yeah, we're moving on now. We're moving on up to the side. To a deluxe apartment in the sky.
Okay, that's definitely not right. So it equals the sum of this plus this. What about 411? 179,000, baby. All right. Oh, I love it. All right, so now let's see what it is. Let's see what we're doing. The sum of $365.73, y'all. Believe. And keep in mind, that is us. Monthly profits. Profits. Sorry, y'all spending way too much time on this. I want to look at it. There we go. Monthly profit, $365.73. That looks right, 260. Yeah. So 365. Yes, that's correct, BT. No dumb questions in this community. That's right. So BT says, I'm making the assumption here that the 33rd, 35th refer to the sequential number of trades for that particular strategy. Yeah, that's exactly right. BT, like I said, there's no dumb questions. There's no dumb questions. The only dumb person in here is me. Yeah. I got issues. I've got issues. Issues. By the way, have y'all not read the let me share this with you. If y'all have not read the important disclaimer in the Discord, y'all need to. And you can even download it. And what I did is basically, don't tell anybody this, I've basically just copied Tasty Trades because I don't have money to afford lawyers and stuff. So I just said, Bobby Gaines, aka Sweet Bobby, is a raging lunatic, has been clinically diagnosed, and this is all true, y'all, with PTSD, ADHD, and depression. put it bluntly, he is plagued by numerous mental and physical conditions that make his thought process and actions questionable at best. He is eat up with the diabetes on his down and toes. He is on virtually every antipsychotic medication known to man, and he is subject to wildly unexpected mood swings and extreme outbursts of emotion. If you follow anything that this man says or does, you are a fool. A prudent person would run away from him or anything associated with him and get the hell out of Dodge, baby. That's hard to swallow. But even so, we made $365. Hey, Beth, want to go Red Lobster there, baby? Big Daddy take you in? All right. All right, so let's see. So we got that one closed. So now, what we're going to do? Well, we need to put our trade in here too, right? Now, in this trade, my normal tranche size is 1. So I'm just going to put on 1, baby, because our profits keeps going up, even though I'm under allocated. So let's put us on 1. So let's go trade. Going to do the same thing we did in the other account. We are creatures of habit. So I'm going to go close to 60 without going over. I'm going to go to 49. And I'm going to sell 2 of the 3530s. That's what I'm going to put on our video for the day that we made 179,000 for, and we'll get a, what do they call that, clickbait or something? We'll get a thousand to watch it. Will you shut that dog up? Shut up, River. 3930. What? Oh, he nice. Dog's the size of a horse. He's a golden doodle. Unbelievable. Peas like a, what did I say? Peas like a Russian horse on a flat rock. What is that? Like a cow? What is that? Peas like 3930. Buy it. Sell to 3880. Pea like a cow on a flat rock. That's what it is. So it'd be nice to get that for $15. We probably won't. They're gonna make me put up $1,100 in collateral. Let's see if we get 15. Ha ha ha! Ha ha ha! Shut up, Abby. We get him out here for real. He's still driving me nuts. Yeah, take the dog. And I've got someone out cutting my 200-year-old tree today. And River won't go out because he's scared to death. And the 2 chickens, Charlie, Jesse, Raphael, and Don King are scared to death of them doing the construction. What did I say? 11236. So we'll put this one 11237. Emma, will you take him out? Maybe you're the only one that can do it. What's he barking at? My cat? What? Well, get him out. Unbelievable.
Bobby, while you're entering those, I just posted in the chat. And I'm telling you and kind of asking you at the same time. I said, remember, you cleared out the portfolio. You went on vacation a month ago, so you have less trades on to harvest, correct? So
that's exactly
like when you showed your profit calendar, it wasn't really what we in past weeks have seen, because you cleared out all the trees and you've had to rebuild your forest. So it hadn't been harvest time for the trees yet.
Exactly. Cause remember, I definitely did that. That's a good point, Ed. I cleaned everything out so I wouldn't have to worry about trades on vacation, and it worked out really well. So yeah, so let's just see. Let's see what we've done. Let's see. I should,
but I did want to mention that, because if you look at prior months' profit calendar, for the most part, there's a lot of green there and not very much orange.
Yeah, I mean, we did much better last month. We did 1,044, right? So this month we did, because Bobby went on vacation, 365. What we did before that, we did 526 and 954. So, yeah.
And I think those red numbers we just saw may have been at a point where the market had a hard pullback and your buying power got a little high. So you kind of had to tamp down on the positions a little bit.
Yeah. And we really shouldn't fear those things, right? Because even so, even with the big $753 daily loss there, our week was only down 360, and we turned out bringing the profit for the month. Yeah. Yeah. Good stuff. All right, so let's save that, close it. What have I got to do now? So we put on our new trade. Let's make sure I put it in my spreadsheet. I said that is the 11237. So let's go put him in his crate. Everybody deserves to join the crate. 11237. That's why we trader nerds stick together. 11237. Right click. Move to crate. Add crate. 11237. All righty. So let's go now and let's get our field order where we open the trade. Let's right click. Let's create a duplicate order. And then let's change accounts and go to the Bobby Beth team. Get them here, please. Howdy doody. Let's go put him in the IRA spreadsheet. You mean you can do this in an IRA? Oh, I didn't even record my credit. So of course you can do it in an IRA. So let's go put him up here. Micro, the one tranche. If we get a bad down move, I'm gonna go to 2 or 3 tranches, but it's not a great day to put a trade in. So this is gonna be 1, 1, 2, 39. 30, 9, 30, 38, 80, 35, 30. Puts 1, 1, 2. 49 days. This is so easy, y'all. I mean, it's not easy. This is the culmination of a lot of research. Not the 111 trade. We haven't been doing the 111 trade before, a little less than a year. But it's a selling premium trade. It's what we would have done anyway, selling puts. But it's just that we brought in 69.12 there. So now let's go see. Hello, ladies. See if there's somebody we can close over here. So my son and I went to sell barbecue tickets for Founders Day here in Bowden. Oh, if y'all come to Bowden next week, we're having Founders Day, and I'd love to sell you a $10 barbecue ticket. And Devin's like, dude, you go in there to the pharmacy and to the grocery store, and you're just asking people if they want to buy barbecue tickets, and most people say no. How do you deal with rejection? And I go, dude, rejection is an awesome thing because we play the numbers and probabilities. I said, do you realize how many ladies that I went up to when I was, in my dating years, that I would go up to and say, well, hello, lady, how are you? And she would just turn a little way. She'd just walk away. I said, Devin, your daddy got rejected all the time. And until the day that I went up to your mom and I said, well, hello, baby. And she was smitten with me. I said, Devin, it's just a numbers game, dude. I said, you gotta, rejection is how you achieve success. So, selling barbecue tickets get rejected. It doesn't bother me at all. You got to, what did I say this was? 39. I says, because eventually you get to bed. Beth's like, whoa, hello, Bobby. Beth, are you in here? But she would have a totally different story. All right, so we got that at 1129. So let's see if we got a few hello ladies here. So 1118 is 86%. Well, hell, I can do my sound.
Hello, ladies.
Yeah. Back when Bobby was cruising the mall, baby. Huh? That's 86%. So we got 66%. We got 88%. So I'm gonna compare days. That's got 33 days left. This one has 33. Oh man, that's another one of those that's messed up with my. I can't even look at that. I don't even look at it. So this is the one I gotta close. It's a 1-1-1-2 trancher. 1-1-2-39. Down 5%. We don't lose on trades at 83. Well, 49 days. Can't even consider that. 1-1-1-10. Down 85%. Oh man, that's one of them that's messed up on my strikes. I got to figure out what's going on with that. 1-1-1-14, up 60%, up 42, up 50. Again, that's one of those that, hey, you can take off the naked, have a free little thing on 1-1-2-38, up 24, and 1-1-1-16, up 60. So we know the candidate. Well, hello. All right, so now we gotta go close this. Chunka. Right click, create closing order, sell that. And then we're going to buy two of the 3350s. Buy two of the 3350s. Come here, babies. There you are. Welcome. 3350, so 190. See if we can get out for 175. So you don't come here often. Huh? A little more. So you mean that me buying you a Jack and Coke is not going to work, huh? So we got to go to where? The Red Lobster, Beth. Will that work? Got to pay a little more money. Does that make you like little Bobby a little better if we take it to the Red Lobster? And no, we're not going to Red Lobster in that. Plus, kids should be seen and not heard. Now, which one do we take off? 1118. We took off the 1118 at $2. 8, $2. 1118. There she is, our oldest trade. Well, how about that? Older women are beautiful lovers. My friend Ronnie McDowell. Older women, they understand. When I was doing a radio show, country radio show, Ronnie had this beautiful girlfriend, and my radio partner Jimmy was single. He goes, "How in the world did you find her?" And he said, "I found her at the grocery store. Found her at the grocery store." And I was like, "Jimmy," I said, "you go squeeze you some zucchini at the Piggly Wiggly right now." I thought Ronnie McDowell was going to have a heart attack. That's so long. So what do we do? $2. 118, $2. So it cost us a little bit of money to get out. It cost us $28, but we brought in a nice credit. 118. That's a 2-trancher. Taking off risk over the weekend. 729, 22. We made 89.86. Daddy gonna go to the Outback. Get some Alice Springs chicken. 6. Another 89.86. Okay. Save it. Let's go put it in our profit calendar. 89.86. Profit calendar IRA. We'll figure out how we did for this one. 89.86. Come on, baby. Work right there. Format painter. Yeah, why was this one so much easier? 89.86. So we made $429.74. And Beth says I don't do nothing around the sales. That's what she says, actually. You just leave me to do with all this stuff with the kids. You don't ever do anything, baby. Stifle yourself. Look at Big Daddy here. So it's format painted down here. Chugga. Oh, man, that don't look right. Here. I said let's format painter equals the sum of chaka control key chaka close parentheses, and we made $1,254.28. Come on down. Ken's got to go be a sous chef. Go, Ken. Go, Ken, baby. Yeah, Carrie, you heard that? Kids should be seen and not heard, right? Abby, stifle yourself. You're gonna be good to school next Friday. I'll be so happy. So we made $12.54.28. Let's count up all our profits. You got to know when to hold on, know when to fold home, know when to walk away, know when to run. You will never see me running unless I'm being chased by somebody. So we made $12.54.28 plus, look at this. August, July, 363 plus 365.73. $1,620. My mortgage payment is $1,550 a month. Ta-da! And we can go to Southern Lady tonight. Praise the Lord. All right, no, hush. Anyone got any questions, comments, anything at all? All right, if not, y'all have a good weekend. I will see y'all Monday.